Hello friends, I am Rahul Gupta from Startwithwhy. So today we are going to discuss the very important topic called as salary. Now the salary has so many components around it and it is very hard to digest what those components are. Crucial part is like when we get a job offer letter, our CTC looks very huge. But when whatever we get in our hand is a very small. Now the question comes, why there is a drastic difference? So this video will talk about all the things starting from scratch to understand your CTC to in-hand salary. Okay, so stay tuned till last to understand each and every part of your salary. Okay, so we'll take a very small example. Let's say there's a Mr. Kreet who is a software engineer in one of the fantastic company Tata Consultancy Service, and he got a job and his salary is decided as a 6 lakh rupees per annum. This is a per year. So now what he did, because he got a first job, he thought, okay, so that means 60,000 divided by 12. So every month I will get a 50,000 rupees salary. And he told to his all the friends, I have got a job of 50,000 rupees per month, sir, per month. Amazing, isn't it? And after 1 month of working in the TCS, he get a salary of 36,550. My God, he got surprised. Why? What happened? Where is my remaining salary? Okay, so this video is let you know that what are the different component of your salary and why this difference comes. Correct? So stay tuned till the end to understand each and every part of this. And in the end, we will do a very fantastic simulation or the compilation of your salary structure. Okay, so let's start without doing any time waste. So the first thing I will explain you what is your CTC contains of. Okay, so the different component of this, and then we will take the example and understand in detail. So the first thing is called as CTC. Now there is a very important meaning of this. What is the meaning of CTC? So when we say CTC, it is a cost to company. The meaning, it is the amount that your company is spending on you. It includes everything which the company is spending on you. That is called as CTC. Okay. Now this CTC is divided into two parts. First one we call is the fixed part, another is called a variable part. Fixed part is sometimes also called a gross salary. Okay, so that is nothing but CTC minus variable pay is called a gross salary or a fixed pay. This is generally 80 to 90% of your CTC. Okay, variable pay is basically 10 to 20% of your CTC, depends upon the company to company, and this is paid not in your monthly salary. It is paid at the end of an year or the quarter or the half year, depending upon the company policy. Okay, and so every month whatever the salary you get, you will not get this amount whatever is here. Now let's move on to the fixed pay. Under the fixed pay, there are four components that we are going to learn. So the first one is called a base pay, which is basically your benchmark. All remaining items are calculated based on the base pay. So base pay is generally is the 40% is your fixed salary. So whatever the fixed pay which is there, 80 to 90% of your CTC, the 40% of that will be your fixed pay. Now the next comes is the HRA. So what is HRA? HRA is the rule, like if you are staying in a non-metro city, it is a 40% of the base pay. Okay, it is not a fixed pay, it is a 40% of the base pay. If you are staying in a metro, then it is a 50% of the base pay. Correct? So anything you can take. Like for this calculation, we will assume that we are staying in a metro, so we'll take a 50% of the base pay. Okay. Now, basket of allowance, does it matter? No, it doesn't matter, because finally everything is taxed. Okay, in the HRA, like there is a partial taxation, we will discuss that down the line. Another thing is called a basket of allowance. What is this basket of allowance? This has so many allowances like your mobile allowance, internet allowance, convenience allowance, food. There are so many different kind of allowance which are there. That is the part of your CTC only. So that is the remaining amount which is there. Subtracting base pay and HRA from fixed pay, whatever is remaining is called a basket of allowance. So this is green color is basically showing this part, this components will be the part of your monthly salary. Okay. When we talk about retirals, now whenever you do any corporate job, so as per the government, you should keep aside a certain amount for your retirals from the start of your job. Okay. So now there are two type of contribution, one by employee, another by employer. Okay, but the employer also include its contribution in your CTC only, because finally this is the amount that company is paying for you. Okay, so that is a part of CTC. So employee contribution, which is a 12%, employer contribution with that is also 12%. So 24% of your base pay, not of your CTC. Correct? So much hodgepodge. No? We will try to simplify it. No problem. Then comes the gratuity. Gratuity is the amount which the company take out, okay, and every month from your salary, which is a 4.81% of your base pay. And if you complete the 5 years in a company, okay, that amount is basically paid to you as a gratuity, like as the owner that you are working in a company for such a long time. Another component is called a superannuation. So if few people are more concerned about their retirement, so they start saving an extra amount. So that amount will be deducted from their salary every month, that you need to declare. Okay, and max is the 15% of the base pay as per the government. Now, so these are the few, and variable pay we already discussed. So these are the components of your CTC, correct? Now, once we understand this theoretical part, let's apply this in the example so that we get a better clarity. So now, exactly same thing. So let's say I have taken the same example, Krit, whose salary is a 6 lakh rupees. That means his fixed pay, which is a 85%. I have taken the average of this. 5 lakh 10,000 rupees is the fixed salary. Variable pay 15% is a 90,000 is the variable pay. Base pay, when we talk about, it's a 2 lakh 4,000, HRA 1 lakh 2,000, and basket of allowance is the remaining amount. Okay, out of this. Okay. Now the next thing comes the retirals. Retirals is the fixed amount, which is nothing but a 12% of base pay, which is 24,480, and then 9,812. So this is your retirals, and is your basically like a variable pay. Now the thing is, like, let's convert these number into the percentage, because percentage will give us a clear idea. So now if I convert this with respect to percentage of CTC, because as of now if you see, there is a hodgepodge here, because base pay is calculated based on the percentage of fixed pay, but HRA is calculated based on the base pay. So there is a hodgepodge. Now direct comparison we cannot do, because the denominator for every is changing. Correct? So that is basically the problem. Now how to avoid that? To basically keep the same denominator, which is nothing but your CTC. So what I am doing, this amount divided by your CTC will give me the percentage. So 34% is your base pay, 17 is this, 24.2, and this is your retirals. Okay, everything that you are not going to get in till you retire basically. Okay, and 15% also you are not going to get in your monthly salary. You are going to get that in your quarterly, yearly, correct, or your half yearly, depending upon your company policy. Now let's put together this in a very nice manner so that we get a more clarity. Okay, so now here what I have done, 6 lakh I have put at 3 buckets. The first bucket, those components which are contributing towards your monthly salary. So these are the 3 items: base pay, HRA, and basket of allowance, which contributes to 75.2%. Okay, that means, okay, and retiral is a 9.8, variable pay is a 15%. That means in your monthly contribution, only 75.2% of your expected salary is going to come. Okay, wow, 25% direct deduction. Where is that 25 gone? 10% approximately is gone in your retirals, and 15% that you are going to get at the end of year, or in the half yearly, or in the quarterly, depending upon your company policy. Now let's put this in a more perspective. So your annual payable salary is a 4,51,227, but monthly payable salary is coming 37,602, which is a 75% of your monthly expected salary of 50,000. Okay, now that means 25% is gone. My God. So now you will be thinking, okay, so 75% I am going to get, but the answer is still no. Why? Because this is just a component that you are entitled to get, but there are few deductions, isn't it? Let's learn the deduction. Government is not going to give you this money like that. They will also take their shares, isn't it? Let's understand those shares. So the first share comes is called a government to deduction. That is a labor welfare fund tax, which is a very, very less marginal, correct? But still there is, because there are so many people working in the country. So this, for the government, this will be still a huge amount. So let's say this is a 0.2% of the salary or the any remuneration subject to 25 rupees. So every month at 25 rupees will be deducted from your salary. So that means it's a 300 rupees per annum. If you see with respect to your CTC, it is nothing but a 0.25%, very, very less amount. Another thing is called a professional tax. So this is the tax which is given to the government for being a professional. Sometimes feel, my God, is it a bad idea to be professional because you need to pay the tax? But that's how the government has imposed upon us. So this is basically like if it is less than 15,000 your salary, there is no tax. If more than 50,000 salary, then it's a 200 rupees per month. So total is 2,400. So approximately 0.4% of your CTC it is contributing. Correct? That means now, just now we discussed that your annual payable salary or you are entitled to by government, by company is this much. Now from this we will deduct the government taxes. Okay, so that you will get a net taxable salary. Okay, now you'll be thinking, so I will get this amount. Answer is still no. Okay, keep watching the video to get more clarity. The next thing is called the taxes. My God, income tax. Government is not going to give you freebies. So there are few slabs, correct? We all know that there are few slabs. So every slab like this I have taken just for a reference. Like these are older, like there are two regimes, currently old regime and the new regime. This I have taken the old regime. Now in this, like up to 2,50,000, if your taxable salary, then no income tax. If more than 2,50,000 to 5 lakh, 5%, 5 to 10, it's a 20%, above 10, it's a 30%. So here, this is the tax which is calculated based on your taxable salary, utilizing all these slabs, correct? So that is the good part of the Excel. It automatically calculates. Okay, you need not to do by calculator. Okay, so now, so that means what is your net in hand salary, which is a 4,38,601. Correct. So if you see like how much is this percentage again, let's check. So your percentage is coming approximately 73.1%. That means whatever your 100% salary is there, okay, out of that 73.1% only will come to your in-hand salary. That's it. Okay, remaining is gone in your retirals, your taxes, your variable pay, which you are not going to get now, that you will get at the end of the year. Now if you translate that to your monthly salary, okay, your monthly expected salary was 50,000, that you have already told to all your friends, all your parents. But how much you are getting? 36,550, correct? Now you are getting, what is the reason we are getting so less salary? Okay, but now let's put all these things together, okay, in a bucket. Okay, before that, variable pay. Now another concept is called a variable pay. Okay, now in the variable pay, you are not going to get this variable pay 90,000 as it is from the company. Again, government will take their share. Okay, and that one, this is what we are doing. So variable pay taxes, that is given to the government, which is 10,279 in this case, and then you are going to get a net variable pay which will come in your account again according to your policy. Okay, so that comes out to be 13.3% and 1.7% is the taxes. Okay, now let's put all these things in a perspective in a very nice graph, so that you all can get a very good clarity. So this is the graph that I have made called a CTC breakup. Okay, so this CTC breakup tells you the percentage. So if I put a 6 lakh number, out of which 73.1% is coming is your monthly salary contribution. Correct. Here I have not accounted any sort of an investment. So if you invest, okay, somewhere, and if you declare, your taxes will decrease. Correct. But anyway, if you invest somewhere, that money is not coming in your pocket as of now. Okay, that is the again for the future. So what we are discussing as of now is for what you are getting in hand that you can utilize, that you can consume. Correct? Investment is a one part that we will, that I will discuss in the further upcoming videos in detail. So monthly salary contribution is coming 73.1%. Variable pay is a 13.29, which was earlier 15. Retirals 9.8%. Taxes 3.82. Correct? Now you will be thinking, yeah, this taxes is a very, very less amount. So nothing to worry. What's the issue? No problem. But there is a problem. Okay, the problem is, okay, as your salary rises, correct, this numbers keeps changing very, very drastically. Okay, so that we will see in the next video, where I will be discussing that, okay, how your every promotion is basically will change this tax slab, okay, or this tax percentage. Okay, so hope this video would have given you what is your CTC breakup, okay, how much salary you are getting every month and why you are getting a so less salary, what is the cause. Okay, so if this video has given you enough insight, please like the video, subscribe the channel, share this video with everyone so everyone can understand this mystery CTC to your net in hand salary. Correct? It took me a lot of time to understand what is this happening, so much clumsy they have made. So this video is an attempt to make it very simplified so that we can understand this finance. Generally we engineers don't, we are very good in calculating numbers. Correct? We are calculating any kind of mathematical problem, any kind of engineering problem, but when it comes to the finance, my god, we sucks in that. Okay, so this video is attempt to give you the very good clarity so that you can make a very good decision financially. Okay, thank you.